Hey guys, I'm Heather Voll with VollSquared and Remax Excalibur, and I'm here today with Gabe. Gabe is with Fairway Mortgage, and we're going to have a quick conversation over a nice game of pool. We find that sometimes there's a lot of educational topics that we could discuss regarding real estate that we could put information out for you guys, and it's just kind of mundane to sit at a desk, so we decided to challenge each other to a nice friendly game of pool today.
You got it.
So as we do so, we're going to talk about buying down points in your mortgage.
Let's do it. I'll beat you in a game of pool and have a good conversation.
Awesome. So you're my guest, so I would like for you to break. Sound good?
Okay, pull the rack. Let's do it.
I never promised I was good at this.
We're about to find out.
Right?
Just hope I don't break that window behind you.
Okay, so let's get this conversation started as we start to do it. So in real estate, I know a lot of my clients will come to me and we'll start talking about closing costs.
Sure.
You know, they have a little bit of average on there. You know, I think what average is 3% of what a typical closing cost would be. And then I start noticing sometimes I'll have a client that has a little bit higher, and then I'll ask them, hey, are you buying down a point in your mortgage? And a lot of times they'll be like, yeah, but I don't really know what that means. So do you mind like getting into like what buying down a point means in your mortgage?
Absolutely. So the first time I purchased a house, the lender asked me, would you like to buy down a point? And at the time my rate was like 5.8%.
Okay.
And I was like, okay, great. I'm gonna get a 4.8% rate. This is fantastic. And it didn't work out like that. So what buying down a point means is that you're gonna pay 1 point of your actual loan amount to reduce your interest rate. So basically you're paying down your rate up front, and in return, you're getting a lower rate for the life of the loan.
So when you buy down that point, you're paying cash up front, and that brings down that interest rate, and bringing down that interest rate essentially helps bring down that mortgage monthly payment for you, right?
Absolutely,
Which sounds like a fantastic thing, but there's a lot more deeper to that, isn't it?
At face value, it is. So what happens is we'll have a client, they want to get a point. Oh man.
Ow, solids.
Yeah, so what happens is clients don't really realize that they have a little more input into their actual rate than just whatever the lender gives them.
Okay.
So with rates rising, people are a little bit put off by purchasing a home right now because of that. And they can really bring their rate down if they choose to purchase a point.
Okay.
So that said, what we need to look at before we even get into that discussion is, what is the client's ultimate holding strategy for that property?
Okay.
Are they looking at holding the property for a long time? Are they looking at holding?
I'm gonna call it do-over. I'm cheating.
I'm gonna give you a redo.
I'm too short for the table. That meant nothing.
Okay.
So when you talk about like what their actual goals are, like how long they're gonna be in the home. So let's say I am ready to buy a home. I come to you and I'm like, hey, here's my debt, here's my income, here's my taxes.
Yeah, we get all your paperwork.
And then you tell me I'm approved for 5.6%.
Sure.
That doesn't satisfy me, I want a lower rate. So I say to you, hey, can you help me buy this down? Or you say you can buy this down. Now we've started that discussion of what it looks like to get the lower rate.
Yeah, so that's always on the table. So what we really want to look at before we have the conversation of should we buy this rate down, we really need to look at what are you looking to do with the home? Are you going to be staying there for a long time? Is it going to be a property you're going to live in for 4 or 5 years? And then what we need to do is look at the break-even point on that buy down. So say we decide to buy down the rate, and say you have a $300,000 mortgage on the new property, and you have to buy the point down with 1%. So it's 1% of the amount you're borrowing. So in this case, it would be a $3,000 cost to buy that loan down.
So that's where you get the 1% to buy down the point from.
That's where you get that from, and you have to pay it at closing. So it comes out of pocket somewhere. It comes out now or it comes out later. So that said, what we should really look at that point is the break-even point on that. So if you're looking at purchasing the property and you're gonna stay in it for 5 years, well, we don't want it to take over 5 years to break even on that.
To make that money, that $3,000 that you pay up front back.
So generally what we do is we take the cost of the buy down, divided by the amount you're gonna save each month on your payment, and that's gonna give us our break-even point in months. Generally, if it goes over 36 months, I don't even think we should look at it.
That's pretty smart.
Yeah, because a lot of people, life changes.
Yeah.
Get married.
I know, that's myself included. And that's one of the biggest things that I ask my clients. So when I walk up and we're looking at a house and we talk about, we're looking at a 3-bedroom, 2-bathroom, and I notice Maybe they're a newly married couple and I ask them, hey, what's your life goals? What are you guys trying to do?
Sure.
You know, is this your first townhome? Are you buying a townhome so that way you can, create some equity and then turn around and have that down payment for the next home that you want, and then eventually end up in the dream home, which everybody's striving to do.
Yeah,
and I think a lot of people don't have those serious conversations about like, okay, all they focus on, all they focus on is that rate. I feel like everybody gets so stuck on rate.
Absolutely. So I've had clients come to me in the past and say, I need my rate to be at 299 or 399, and they're really just concerned about the rate. But when we sit down and talk about what they're looking to accomplish, what their goals are, what their long-term plans are, we look at it and we say, well, you're only going to be here for a little while. Why are you going to pay 1% of the total loan amount? And you're never going to really recapture that investment. Another thing I think that we really need to be, if we're going to be responsible and savvy, what we need to look at is if the client has maybe some credit card debt or something like that, would those funds be better spent going towards a 14% interest credit card versus saving a half point on their mortgage rate?
14% is a lot higher than $150 off your mortgage a month.
Yeah, so say you save $150 on your mortgage, but by paying off this debt, you're saving yourself several $100s, maybe an increased FICO score, which will get you a better rate.
Oh, that's smart. I like that.
There's a lot of factors to look at when you're, ooh, that was ugly.
It's a lot better than me. So basically what I understand right now from buying down the points, I'm not helping this game move along at all. Whoever let me play pool, So buying down the points can be a really cool thing because it can help your monthly payment.
It can.
If that's important to you and you have the cash in hand, you're the kind of person who likes to be in an area for a little while. Maybe your family's all here, you got a stable job, you're buying that home, you plan on being in for longevity to be able to make that break-even point happen. Buying down points is something that's totally worthwhile looking at to do. And then that can help you save.
Sure.
And I know I like a little extra cash in my pocket, so that would be wonderful.
And not only can you can save thousands and even tens of thousands of dollars if you use it as a tool. If you're going to be at a property for a long time and we find that break-even point's at 3 years when what you paid up front finally pays for itself, at that point, that client's a great candidate for that because they're going to capitalize on that in the long term.
Especially because they have more equity in their home when they go to sell. They'll owe less, correct?
Sure.
Yeah. I know if you're like me, with Brian being in the military in the past, we've moved around a couple times and stuff like that. I think I would probably be the one that would look at paying a credit card debt and then getting a better income or interest rate that way.
Yeah,
can we talk a little bit more about that?
Yeah, absolutely. So, when you work with the loan officer, every client isn't a one-size-fit-all loan. I mean, we really need to look at each client's goals, where they're at financially, what they're looking to accomplish, and get them in a product that works for them. So somebody who's going to be moving like a military family or something like that, it doesn't make sense to put them in that product. And loan officers, we don't make any money for selling you a point. So our job is just to get you in the very best possible product for you.
I like that.
And with that said, a savvy loan officer, what they're going to do is they're going to present you with several options. I like to give my clients a spreadsheet, and I like to give them several rates and several break-even points, and then we sit down and we talk about, okay, which one is going to fit your lifestyle the best? And when we find that one that they're comfortable with, then that's the one we move forward with.
I like that a lot. That's smart. So when you're buying down a point, we talked about this, it's the 1% of what the home is that will take you down to the next available. Is that how that works? Because it's not like you don't go from 5.5 to 4.5 just because you paid that 1%.
Correct.
So how does the configuration of what the next rate will be kind of play? And I know it's never consistent. I'm sure it's, you got to figure it out. No,
that's a great question. So when you buy down, it's not just that 1% buy down. Like I said, it's not a 1% reduction in the interest rate. It's 1% of the total loan amount that you're actually reducing that is the cost of the buy down.
Oh, okay.
So
how do they figure out what the next interest rate is going to be?
Sure. So that's going to be dictated by several factors. One of them is going to be the market rate.
Okay.
One of them is going to be the lender.
Okay.
And the other is going to be the client's FICO score, debt to income ratios, all the things that we qualify them on.
Okay.
So it's not just 1 point is, the next jump. Somebody can pay 0.25 points for a 0.25 reduction. And that's going to be 0.25% of the purchase price as well. So 1 point is 1% of it, 0.25 is like 0.25%, And so there's a sliding scale. So it doesn't have to be a whole number. I mean, it could be a 0.875 buy down.
Okay.
So there's a lot of factors, and with each point buy down, the rate that they're buying down decreases.
Okay. Very smart. Are you seeing a lot of clients right now, because as we mentioned earlier, we're starting to see some increase in those interest rates that are going up, and the market is shifting just slightly.
Sure.
Is buying down a big topic? Are you seeing it a lot?
Buying down is a very big topic right now because rates are increasing, and some of our clients are really conscious of that, and some of them know that this is going to be a long time investment that they have. So we're having those conversations. Look at that. We got a pro. The 14 in the corner, you got a shot set up there. So we're having those conversations a lot more than we used to, because with rates being a little bit higher, and if a customer knows that they're going to be in a product or a home for a long time, we have to look at getting them the best rate for that long-term investment.
Aww. Okay, so what happens, I'm just gonna throw a couple scenarios at you if you're okay.
Sure, absolutely.
Let's say I'm at 5.5, I buy down a point, I end up with my next interest rate, and then it's in a year or two from now, the option of those 3s or those low 2s were around again.
It's a great question. So that's one reason why buying down rates aren't always the best option, because one, if you're going to move quickly, why pay all the money up front? One, if you have other debts that you're better suited paying off, pay those down first. And 3, if we think that the rates are going to be dropping back down to levels that we saw last year, well, there's a good chance that there could be a refinance. Maybe something comes up in life where we need to refinance, pull some money out for that, and we think that could be an option.
Okay.
When you buy that point down and you refinance, that discount doesn't apply to the new loan, it's gone. So
you just gave up money for free.
You just gave up money for free, essentially. So the only time it really makes sense is if we're gonna be in that property for a significant amount of time, and that break-even point is really where we need to look at and say, okay, this is where you're gonna break even on this investment. Are you gonna be in this loan for longer than that? And that's gonna help us make that decision.
That's really smart. I like that a lot. So Gabe, we talked about some really good information today. We talked about what buying down a point looks like. Finally. We've talked about when is it right.
Sure.
We've talked about other options instead of actually maybe spending that money. Because while maybe the purchase price is $300,000, that's 1%, that's $3,000. Sometimes there's some people that have to spend up to $12,000 to get that done, and that's a lot. I know I'd rather do a lot more with $12,000 than buy down my mortgage rate. So when a client comes to you and they want to have that discussion, like what are some key, let's just say when they come to a mortgage lender and they want to have that discussion, what are some key questions that they should be asking to educate themselves the most?
Sure, so the first thing that they should really understand is that although a lower interest rate is great, buying down in many cases is not a good option. There are some cases where it is, and at that point we should have that conversation. Another thing is as loan officers, we want a client's business, and we ultimately want to give them the best rate possible, because we don't make any more or less money based on what the rate is.
Okay.
That's it. So, we want to give the best rate possible, and then occasionally it doesn't hurt to ask a loan officer, can they help you with those points? Sometimes we have it at our disposal where we can actually add additional discount on top of our discount on those points, and help our person get a better rate, and we can be competitive against another lender. So a lot of times clients are afraid to ask that. Ask your lender, say, hey, can you spot me some points? And sometimes we have it at our disposal, not always, but if we do, we're happy to use it because
gives you a little bit of a cutting edge.
Gives us, cutting edge, absolutely.
That's nice, I like that. So that can help a person save a little bit, even more money.
Yeah, so always ask, it never hurts to ask.
Well, it looks like I might be kicking your butt a little bit. So why don't we wrap this up? Why don't you tell everybody how they can get a hold of you?
Sure. So I'm Gabriel Salazar with Fairway Mortgage. My email is gabriel.salazar@fairwaymc. And you can also reach me at gabrielsalazarhomeloans.com. And please reach out. I'm happy to help you out and maybe look at getting you some discount points on your next loan.
That'd be fantastic. As you know, I'm Heather Voll with VollSquared and RE/MAX Excalibur. You can reach me on Facebook at VollSquared. I'm also on Instagram, and we're starting on TikTok. We've got all of our videos on YouTube, and we just want to say a quick thank you for everybody who takes the time to watch our videos. If there's any questions that you have for us, just go ahead and drop them in the comments. And feel free to reach out if there's a subject you want to see us cover, or maybe there's a fun game that you think we should play while we talk about something, real estate related. So As always, we appreciate you guys, and if there's anything you need, feel free to reach out. Thank you.
Thank you.